Welcome to this explainer. Today, we are diving into an absolutely crucial tool for anyone looking to buy property in the Green Mountain State. We're talking about why a localized Vermont mortgage calculator is, hands down, the most important financial GPS you can possibly have for navigating this specific housing market. Before you even think about attending an open house or calling up a realtor, you really need to understand the numbers. And today, we are going to map out exactly how to do that.
You know, it is so easy to get caught up in the romance of it all. You might have visions of a cozy cabin in the woods or maybe a historic farmhouse totally surrounded by autumn leaves. It sounds amazing, right? But before you start house hunting, we have to ask, have you truly mapped out the real financial boundaries of buying in this unique state? Because the truth is, the housing market in Vermont is incredibly localized. What looks like a great deal on the surface actually requires highly precise financial planning to ensure it really fits your real-world budget.
Just look at how wildly the market varies from one county to the exact next. The reality is pretty stark. Buying blind in a high-demand area like Chittenden County compared to a more affordable spot like Rutland could literally shock your budget if you aren't prepared. In Chittenden County, the median monthly mortgage payment is sitting at $2,893. That is significantly higher than the national median of just over $2,100. But then meanwhile, just down the road in Rutland County, that median drops to a highly affordable $1,439. If you don't know exactly which market status you're walking into, your budget is completely unprotected.
All right, Section 1, Uncovering Hidden Housing Costs.
So your monthly payment is actually far more than just paying off the loan itself. So many first-time buyers focus entirely on the principal and interest, but your monthly commitment is really more like a pie made up of principal, interest, taxes, and insurance. It's often abbreviated as PITI. Now, some properties might even have homeowners association fees added right on top of this. Neglecting any slice of this pie when you're doing your initial budget math is incredibly dangerous.
Let me give you a very specific example of why this matters so much in this state. Washington County has an average property tax rate of 1.81%. Vermont's property taxes vary drastically by municipality. A generic online tool might just assume a national average for taxes, leaving you literally hundreds of dollars short every single month when the actual local tax bill comes due. This highlights exactly why town-specific calculations using a localized Vermont calculator are absolutely mandatory. But what happens if you put down less than 20% on the house? Well, another hidden cost triggers. Private mortgage insurance, or PMI. If you don't have that 20% down payment ready to go, lenders require you to pay this additional monthly premium to protect them. Again, this is just another crucial slice of the pie that a localized calculator will automatically factor into your monthly payment projections. It lets you see exactly how increasing your down payment might reduce or even completely eliminate this extra cost.
Moving on to Section 2. Why calculate before you buy?
The ultimate solution here is using a localized Vermont mortgage calculator before you even glance at property listings. Why? Because true financial peace of mind comes from knowing exactly what you're signing up for before the ink dries on the contract. Look, you wouldn't navigate the back roads of Vermont in a snowstorm without a reliable GPS, right? Well, you shouldn't navigate its housing market without this digital tool to lock in your true purchasing power. It establishes a completely realistic price range based on your actual income and debts, ensuring you don't accidentally fall in love with a property that exceeds your comfortable limits.
If you try to figure out your monthly housing costs by hand, you are putting yourself at a huge disadvantage. Testing scenarios manually takes hours of work and carries a massive risk of mathematical errors. On the flip side, a specialized digital calculator gives you high precision and immediate results. The absolute biggest advantage here is effortless scenario testing. You can easily toggle the home price, change up your down payment amount, or swap between a 15-year and 30-year term to instantly see how it impacts your monthly cash flow.
Okay, Section 3. Choosing your ideal mortgage. Once you have your financial GPS powered on, it's time to input different routes by comparing the specific loan types available to you. Every buyer's situation is totally unique, and selecting the right vehicle for your loan is essential. You can instantly test scenarios for stable conventional loans. These are great if you have strong credit and a steady income. And surprisingly, they can require as little as 3% down. You can test that against government-backed FHA loans, which are fantastic alternatives if you need much more flexible credit guidelines but still really want the advantage of a lower down payment.
Or, if you are a veteran or an active duty service member, using a specialized Vermont VA calculator is a complete game changer. It will factor in incredible earned benefits like a 0% down payment and the complete removal of PMI requirements, though it will account for the VA funding fee. On the flip side, you can compare all these stable, long-term options against something like an adjustable rate mortgage, or ARM. This starts with a fixed rate and then adjusts based on the market. It's a highly useful strategy if your ownership goals are strictly short-term and you actually plan to sell or refinance soon.
Next up, Section 4, Unlocking Vermont State Aid.
What is really fascinating here is that Vermont actively wants to help residents become homeowners, especially first-time buyers. Programs from the Vermont Housing Finance Agency, or VHFA, can offer incredibly competitive lower interest rates. If cash is tight, there are state programs that provide down payment assistance grants or low-interest loans to drastically reduce the cash you need up front. And for military service members, there are some truly powerful combinations of federal and state aid. A good localized calculator will help you instantly visualize how plugging in a lower VHFA interest rate or throwing in a down payment grant dramatically drops your monthly burden.
All right, Section 5, the pre-approval process.
Sellers in a busy market vastly prefer buyers who have their finances thoroughly checked and verified. So, with your budget securely mapped out by your calculator, you move to Step 1. Gather your proof of income, verified assets, and credit history. Step 2 is submitting those directly to a local lender, someone who actually understands Vermont's unique real estate values and local rules. Step 3 is receiving that vital pre-approval letter of commitment. This letter proves to sellers that you are serious, highly capable, and fully ready to close.
It totally reminds me of that classic Mark Twain quote, "The secret of getting ahead is getting started." Getting ahead in the highly competitive Vermont housing market means getting started right now by budgeting responsibly. It means using the absolute right digital tools to establish your exact financial boundaries, way before you ever fall in love with a property you can't actually afford.
So, before you go and click on that next listing for a picturesque Vermont home, ask yourself, have you actually run the local numbers yet? Do you know your true purchasing power when local taxes and insurance are fully factored in? Your dream home is definitely out there, but are you equipped to claim it? Take that first calculated step today.